Right now, Eric Brotman of Brotman Financial Group Incorporated is joining us because 3 recent changes from the federal government have significantly impacted the financial industry, and we need to know what this means for our money.
Yeah, the Department of Labor put out some rules about 2 years ago talking about a fiduciary standard, which was going to force all financial advisors to put the interests of their clients ahead of their own. Sounds reasonable, right?
Right.
The problem is that this caught a lot of lobbying from the big brokerage firms and banks and insurance companies who have armies of salespeople who work for them. So the rule has not passed through Congress, but now the SEC has put out a rule which is a best interest rule. Essentially, it's a bit of a compromise.
Okay.
And what the SEC is trying to do is they're trying to put out a rule that says even if you aren't a fiduciary advisor, if you want to call yourself a financial advisor or a wealth manager and you actually do those things, you have to be licensed to do that and you have to put your consumer's best interest first.
Okay, so from the consumer standpoint, this is good, this is bad, what?
Well, the fact that the DOL proposal failed, I think, is challenging for consumers because
Certainly.
consumers don't know necessarily the right questions to ask when they hire a financial advisor or someone they think is a financial advisor. And so it's important to know who that person works for. Do they represent the clients or do they work for a company? And at the same time, how are they paid? Are they paid based on product sales? Are they paid based on assets under management? Are they paid for advice? And there's lots of different models, and you just need to know the right questions to ask.
Right, and so really it comes down to the difference is that person's licensed or not?
Is that person a certified financial planner practitioner? That is absolutely step one. That is not to suggest that all CFPs are terrific advisors and all non-CFPs are not. That is not the point. However, it does create a fiduciary standard, and the Code of Ethics for the CFP board that's just been announced that goes into effect in 2019. It's available online. It is a much higher standard to hold these practitioners to, and it's a good thing for consumers.
Okay, right. So there is a new code of ethics for financial planners. That's great news for consumers.
That is great news for consumers, and of course, a code of ethics is only good if you follow it, and if there's some type of way to find those bad apples who don't follow it. So hopefully that will continue as well. We want to keep the bad ones out of the business for sure.
And I'm sure it's pretty lengthy, but what are some of the changes there, the new code?
Essentially, acting with honesty and integrity and putting your consumers' interests first. I mean, these are not difficult things to grapple with. It's shocking that we're even having this conversation.
Yeah, but we have to.
We have to.
All right.
Consumer beware.
Yep. Thank you so much, Eric. All right. And don't